This week I took only two trades, one win and one loss. And honestly speaking, I am more proud of myself this week than weeks before. And in this video, I am going to break down exactly what I did right, what I did wrong, the lessons, so that you too will not also repeat the same thing. Here on my screen, this is the 1 hour time frame chart. And you know me, I trade two things: market structure and psychological levels. So as you can see my psychological levels on the chart, I have 5,050, also have 5,100, 5,000 year ounce per gold. This is gold chart, by the way, and this is 1 hour time frame. So me, on the 1 hour time frame, I look at market structure only: higher highs, higher lows, higher high, higher lows. Then on the 15 minutes, I look for my trades. That's basically what I do. So when I woke up on Monday, the market, let me use the replay tool so that you get it better. So on Monday, when I woke up, the market was around 5,150 per ounce. This was where the market was. And looking at 1 hour market structure, we were bullish, we were extremely bullish. So I needed to just look for a buy opportunity. So on Monday, I was looking for a buy opportunity. So when the market broke above this psychological level, I was waiting for it to come back to the psychological level, then I'll take a buy. So I was waiting patiently. Then around 6 a.m. thereabout, the market came to my zone. Okay, this is where I entered after seeing this dodgy candle, this dodgy. When I saw this dodgy candle, that I placed a buy. In fact, this trade almost hit my stop loss. It was left with some few pips to stop loss. I think I used 25 pips thereabout, around this side. Then this red candle came close to my stop loss, but it didn't stop me out. And as usual, I always target 1:3. That's my risk reward ratio, 1:3. So when I place a trade, I set 1:3 TP, then I forget about it. Then I focus on my other stars. So I set 1:3, and that was on Monday. So I left to do my other things. So let me use the fast track tool, then you see how fast it went. In fact, I took profit on that very Monday, on that same day. Yes. And this trade made me to pass my 10k funding pips challenge. I made that 10% on that Monday. I passed the account. Okay. So this was, when you go to the 1 hour time frame, after Monday, this was a break of structure, a valid break of structure, and this was the origin. This was the origin that caused that break of structure. So I was waiting for a pullback into maybe any discount or premium area, but mostly I use the discount area, which is 50% Fibonacci level and below. So it can either be 50, 61.8 or 75.8, 75.3 rather. So this was my so any point in time the market comes below this 50 line, I will look for a buy. Okay, and the only valid point on this line is the psychological level. This is the only support level that I'll take a trade on. So is this psychological level? But something happened. I actually didn't follow this. I did a different thing. So let's see how it played out. So going back to 15 minutes, like I always take my entries on 15 minutes. The market was doing its own thing. So on Tuesday, it came back, but this time I was still asleep. I don't take trades until somewhere 4 a.m. in the morning. That's when I wake up. So the market was doing its own thing. I was watching. By this time I was awake, but it was below the 50 Fibonacci level. Okay, it was below the 50 Fibonacci level. But how this market behaved, There's one thing about gold that I have observed for like a month now. During the Asian session, if gold moves heavily, okay, that day is likely the gold is going to consolidate. So on this day, I didn't take a trade because I was how gold moved that very day. I was scared the market would not move again, so I didn't take a trade. And funny enough, it was consolidating, and then it came down to break this swing low. Okay, this swing low came down to break this swing low, but when you check the 1 hour time frame, it didn't break. You can see on the 1 hour time frame, it gave a bullish doggy. Okay, and then another bullish candle form. So you can call this as a morning star on the 1 hour time frame, meaning the uptrend is still intact because the structure, there's this swing low couldn't get broken. Okay, so it was the same thing moving on, which is buys. So Tuesday was over. So on Wednesday, fast track on Wednesday. Okay, this is Wednesday. So on Wednesday, I was looking for a buys as usual. Then I drew my counter trend line. This is where I got it wrong, and this is where I took the loss. I drew my counter trend line like this. First touch, second touch, third touch, and it is broken, and it is retested. So in my mind, after it was retested, the trend line was retested, I wasn't thinking maybe the market will come down to this side again. So I just decided to mark my normal structure like as usual on the 15 minutes when I want to look for entry. This is a swing high, a swing low, now a higher high. I was waiting for a higher low around this psychological level, then we'll take it from there. But I wasn't patient enough to wait for this psychological level to get hit. That's why I took the stop loss. So I was watching, monitoring. Then I don't know what happened. I drew this mini support level, this small support level in between. You can see the market was resting on this one. It broke it, came back, tested, came back, tested again, broke it, came back, tested again. So I drew this mini support level. So when the market got to that point, I just said, let me enter. So instead of me to wait for this guy to come and hit my psychological level, give me my reversal pattern like maybe a hammer candle, an engulfing candle, or a shooting star, I couldn't wait. After this market broke below this small support line that I drew and it came back inside, I entered a buy, but my stop loss was below this accumulation here, this small accumulation, and then I always target 1:3 as usual. This trade actually took like 2 days before my stop loss was finally hit, which was painful, yeah, but it is what it is. So that was on Wednesday. So when I enter my trade, I focus on my other stuff and I forget it. I just check it maybe once in a while. So fast forward on Thursday, the market was still there, was still reacting. So you could see that this mini support level that I drew, the market was still reacting on it. As you can see, the market was still reacting. So I was still in the trade as of Thursday noon. Then this trade, it was this candle that took me out of the trade. This small wick. Let me show you. Let me zoom out and show you. This week. It was this week that took me out of the trade, and it took me out like it was like 2-3 pips, and my stop loss was hit. Then it reversed, and then on Friday the trade went to TP. So the trade actually stopped me out for like 2-3 pips, and then went in my favor, which was very painful. Yeah, it was very painful. But what did I learn? I learned that always wait for all the requirements in your trading plan to get or to meet or to be met before you take a trade. Because if I had waited for this support level, which is a psychological level, to get hit, that Wednesday I wouldn't have gotten a trade, but on Thursday I would have taken this trade and I would have hit take profit finally. So you can see how the market was rallying straight and the market went to take profit. So that is it. Next week I'm keeping the same rule. If that means only one trade, I'm fine with that. If that means no trade, I am cool. I'm building consistency, discipline, and growth, not chasing profits or targets. I tried doing that some weeks back and I was really bent. Yes, chasing profits, I was really bent to the ground. So this time around, I'm building consistency, discipline, and growth. So please, if you are new, if you are struggling, and you also want to build consistency, you also want to build growth, you want to build discipline, this channel is best for you. Please subscribe, like this video, and comment below, and I will see you in the next video.